Welcome to Real Estate Today with Yvonne Candy. Learn how to invest in today's residential and commercial real estate. Get informed and get the latest news and trends. Whether you're an investor, home buyer, or homeowner, or just want to be entertained, you're in the right place. And here's your host, Yvonne Candy.
For the past few weeks, we've been talking all about different kinds of ways to invest in real estate. But today we're going to take a little turn in the real estate world and talk about how you can make money in an area you may not have thought of. Today, my guest, Eddie Speed, owner of Colonial Funding Group, LLC, has exceeded over $400 million in transactions. And today he's going to tell you how you too can make money with his system. Welcome to the show, Eddie.
Well, thank you very much.
Eddie, you have a cash flow system that involves using notes. Now, for those people out there that don't know what a note is, could you please explain?
Sure. A note is where someone has sold their property and instead of getting all the cash at the closing, they've carried the financing for the buyer. In other words, they've seller financed the property.
And you mentioned where this would be great for some of those sellers who've had their property on the market for a long time. So it sort of offers another alternative to the buyers.
Well, you know, today with the alternative financing being so critical in the market because traditional money is so tight, traditional mortgage money is so tight, our industry is desperate for people to go out there and offer services related to seller financing, helping realtors and property sellers and all those people that are really desperate for a solution today for alternative financing.
But, Eddie, how do you convince a realtor? Realtors are sort of like, to me, they're sort of stuffed shirt, buy the book. They're not very friendly when it comes down to these alternative financing techniques. They sort of want their commission right now. They don't want to wait. They don't want any funny business. Just make sure you're pre-approved. How do you convince a realtor to even talk to their seller about something like this?
Well, it's all relative to market conditions. If you would have called on a realtor a few years ago when every mortgage broker in the country had all of these, various loan programs from, A loans to, subprime and all the things that we've heard on TV, right?
Mm-hmm.
Or if you would have called on a realtor with some sort of an alternative financing solution back then, well, then certainly they didn't need your service. But realtors and their sellers are desperate for a solution today. They're desperate for an alternative financing solution. We guess, and we can only guess, but we believe that maybe 50% of or more of deserving buyers can't qualify for a conventional mortgage today.
Wow.
Realtors are desperate for a solution for themselves to continue earning real estate commissions, and they're desperate for their clients to enable them to sell their property and move on with their life.
Wow. So this is a very, very timely product, especially in today's economy, because there's a lot of inventory sitting on the market right now that's been there for a year or more. I mean, I've seen properties that's been on the market for maybe even 2 years. So this is fantastic.
Make very good money,
right?
Offering a solution that people are desperate for in the market, and that is specialized knowledge related to seller financing.
Now, I know you want people to take your course, but give us a little example of how a seller would go about creating a note for the buyer.
One of the things that I teach at a very basic level, and to the most advanced levels I teach, I stay focused on this principle. There are characteristics of how you create a loan that drive the value of the loan. So if you were going to seller finance your property, you would want to do it in the best and the safest way, right? Or in a way that if you got ready to sell it, that it would be worth the most money when you got ready to sell it.
Right.
Well, in order to do that, you have to understand the characteristics that drive the value of a loan. And so we talk about these characteristics, and in these trainings that we get into a great deal of very specific detail helping someone understand that it's not just offering seller financing, but it's offering seller financing where you have a predictable result.
Now, Eddie, does this type of system work also with commercial sellers?
You know, in today's market, it's not just the residential lending that the conventional lending has imploded. The commercial lending market has equally imploded, and so whether you're selling your personal residence, or you're selling land, or you're selling, a huge commercial property, we're all faced with a credit crunch today and the lack of available mortgage money. So absolutely, seller financing is going to apply to all types of property.
Well, that's fantastic, because that leaves the market open for making more money. You have commercial real estate, you have residential real estate. As a matter of fact, your system can even work for other things. What about buying businesses or other type of things? I think you can utilize the same basic techniques in your cash flow system for a lot of other type of business negotiations that someone is doing. Wouldn't you say, Eddie?
I know that's absolutely the case. We generally speak in terms of real estate transactions where somebody seller finances their property.
Right.
But truthfully, yes, if you seller financed your business, or if you were offering any product and needing to carry the financing for the buyer because the lack of available money today, the buyer can't get credit the way they used to. Well, then obviously if you're going to be the bank, you want to learn how to do common sense banking. We all know that, the perfect people today, the people that are absolutely perfect, they can probably still get a mortgage. But there's a lot of people today that really are deserving but aren't perfect. And so if we could offer them the financing, then we can move on with our life and sell the house or the business or whatever it is we need to do, and it puts the buyer in there, and that gives them what they want. And, I've been buying notes for about 30 years and bought many thousands. And what I experienced is there were a lot of people that presented a note for us to buy, but it was so poorly structured and underwritten, and the documentation wasn't done right, that I couldn't find the money for them to buy it. I couldn't find anybody else that wanted to buy it because it just simply wasn't a very good deal. It wasn't done right. And so what I realized over the years, and I've worked with many national companies now, real estate-related companies, helping them with processes, and so that when they created a seller-carried note, that it was a good deal, that it was done the right way. And in that process, I've learned that these techniques, while not complicated, aren't commonly understood. And therein lies the value in specialized knowledge. And obviously, our industry is desperate for people to have this today, and that's why I'm here and trying to teach people how to do it.
Well, Eddie, I did hear you speak about the grade of notes. You were saying that some notes sell faster than others, and some notes you might as well just say they're junk.
Yeah. We believe that probably 75% of seller finance notes that are out there are going to be of a very low quality or maybe not even viable at all. Now, understand there is a huge increase in the amount of seller financing over the last 2 or 3 years for the obvious reason that the mortgage companies have decided they don't want to come out and play anymore, right?
Mm-hmm.
So there's an incredible increase in seller financing compared to conventional lending, literally about 800% increase in the amount of seller financing.
Wow.
But what we've learned is that people, not only do they need to seller finance, but they need to learn to seller finance in the right way. We believe there's probably about 6 characteristics that typically influence the value of a note. The buyer, the qualifications of the buyer, the property, the down payment or the structure of how you create the note compared to the buyer's, how much they pay down, the terms of the note, which would be the interest rate, and how long it's payable over, the payment history or the performance of the note once the customer's been paying on the note, and then lastly the paperwork. Now, as simple as those 6 characteristics are, I can tell you that I've bought over 30,000 notes, there's no telling in my career how many notes that I've looked at, way more than 30,000.
Right.
I can tell you that we do not find that people focus on the right things. So we've gone through a very methodical process in zeroing in on those characteristics, helping people in each one of those areas to draw a distinction to be what we consider to be common sense underwriting.
Right. So you need to look for those 6 principles in a note in order to be successful. Well, it's going to make your chances even more successful in selling it.
Oh, absolutely. It's the difference between creating a note that's saleable in the secondary market, and you could create a note that no one else would buy, and even worse, the customer stops paying.
Right, and it's very important how strong that person is who's paying for the note, who's making the payments on the note, because the stronger that person is, then also that strengthens your chance of selling the note, correct?
Oh, that's exactly right. Mm-hmm. And this is an example when you asked me a question earlier about working with the realtors, and you mm-hmm. said, why would a realtor want to work with you? We zero in and show the realtor where we're not just going to do seller financing any old way, but we're going to help them do seller financing correctly and safely, and that then gives their client the confidence to go ahead and move forward and offer seller financing on their property, because now they start to see that it's not just a blind decision, but it's a very carefully thought-out decision in each of these characteristics of how we create the loan.
Eddie, I wanted to know, how would a realtor get their commission?
Well, even though the seller of the property is carrying the financing for the buyer, they've seller financed it, as we said, right? The real estate transaction itself does close, so the realtor is able to earn the regular commission that they would have earned even if a third-party bank would have made the loan.
So in other words, they don't have to worry about if they're going to get their commission later. I think that's what most realtors are concerned about, that they're not going to get paid on time.
Oh, no. If the seller finance transaction closes, well, then the realtor gets paid the commission that they've set forth in their listing agreement. It's just as normal. We've seen, I've been as I said, I've been buying seller finance notes for a very long time, so I've lived in a lot of different economic cycles. But one of the things that's very interesting that's happened today is goes back to what I said a little bit ago, and about these deserving buyers that can't qualify for a conventional mortgage. Not because they have bad credit, not because they don't have a good job, but they're not perfect. In other words, if you're slightly less than perfect today, you're probably going to get rejected at the mortgage company. And so the availability of really high-quality buyers that need seller financing today is probably unmatched in any market I've ever worked in. If you did a transaction, for example, let's just pick an easy number. Let's say a property that would sell for $100,000, for a nice round number. So if a property sold for $100,000, how much would the buyer need to pay down? Partly, I would say that is adjusted based on how good a credit, how highly qualified the buyer is. The lower the scale of their credit, the more they need to pay down. Yes. The number one variable. Now once again, there's these six variables, and there's sort of feeders that would feed off of that. Mm-hmm. But no question about it, the number one variable that most likely will determine the discount or the cash value of the note is the qualifications of the buyer, and most specifically their credit.
Wow.
Credit score.
Well, that brings me to another question. I want the audience to understand that the note doesn't always have to be sold at full value. So
notes are typically bought at a discount.
At a discount. How much of a discount do you think a lot of these notes sell for, Eddie?
We've seen notes sell for 90% plus of the value of the note. So, there would be, 10% or less discount. Then we've seen notes that would sell for 30% discount or more. So once again, now people start to really appreciate, this learning how to make a good note and even offer a service. You can go out and offer a consulting service helping realtors and be involved in the business that I'm in. And understand, you're not funding this business with your own money. So you might start in the business just like I started. I certainly had no money when I started.
Well, so
you're going to be able to help people in this process and get paid very well, helping someone do something that we've experienced they're probably not going to know to do for themselves unless you help them with it.
And Eddie, we were talking about for the past few weeks all the different type of ways that you can invest in real estate, which is very, very easy to comprehend. Most of it is anyway. Now, I'm in the real estate business, so maybe to me it might seem a little bit easier to me than others. But I wanted to ask you, with your particular system, a little bit different from the norm that we've been talking about, the real estate investing, is it difficult to comprehend this system and get started?
It's really not. I started in the business at 20 years old, and I had no real estate or mortgage background. I didn't even have any really business background at 20 years old. And I started understanding, these few basic principles, and obviously the more you do it, the more you'll understand. But I was able to get started and be successful doing it with no education in the business prior to getting out there and doing it. And, of course, now today my passion is to show people these step-by-step processes that I've learned through the years that, now enables me to do this and enables other people to do it, successfully without, that much difficulty. This is not that complicated.
Good. And what about money? I know people are concerned about how much money do they need to invest in this?
I started in the business. I was making $1,000 a month, and I was living in a very old mobile home. And so I certainly didn't have any capital when I got started. And, one of the funny things that I can remember, the guy that mentored me and got me started, he kept talking about buying notes, the same things you and I are talking about today, and he kept talking about buying notes, and I finally looked at him and I said, well, there's just one problem. I said, I can see that you can make a lot of money buying notes. The problem is I don't have any money. And he says, Eddie, listen, you don't fund the business with your money. You fund the business with other people's money. One of the beautiful things about this business is that you can do it from anywhere. You can tell with this southern accent, right? I'm probably not from New York, right?
Oh, I love it. It's
well,
different.
I live
It's
in
different.
Texas. And I bought notes, but let me say something. I bought a lot of notes in New York and New Jersey and all over that neck of the woods, so to speak. And I bought notes in Washington State, and I buy notes in Florida, and I buy notes in California. So you can do this business nationwide from your own bedroom, spare bedroom, wherever you're going to do it. In other words, you can do it from your own home in your own time, and you can work on it when you can work on it, meaning that you don't have to be regimented to work on it from 8 to 5 every day.
Yeah, at your kitchen table, as they say.
Exactly right.
And you sort of custom your classes for the student, depending on if they're advanced or beginners or what have you. Give us a little bit more information about that.
Well, we realize that when someone listens to a show like yours today, hopefully it sounds intriguing. It's certainly a business that I've found intriguing and that I love. And so people want to progress with that. And so they need some more meat. They need some more details. And so we tried to offer some very easy ways for them to go in and plug into some training and get involved and start really understanding if they want to learn more. And so obviously with technology today and having webinars and all those really cool things, we can do a lot of training and show you a lot of details in the business, and you not even have to leave your own home to do it.
What do you have to say, Eddie, to those people who are out there saying, oh, you can't make any money in this economy, especially in real estate? What do you have to say to those people?
I started in this business in 1980. And in 1980, interest rates were 18 to 20%. Realtors were going broke. Builders, everybody. the whole real estate industry was in the crunch, and it's almost exactly the same characteristics that we see today. All the people that have been out there in the market, what used to work wasn't working, and people were desperate for a solution, and seller financing came to the rescue big time. And the exact same scenario today, in that the mortgage money, not that interest rates are high, but there's no mortgage money available, and it's the same result.
Right.
And so seller financing comes to the rescue, and so people are going to be able to get into the business the way I got into the business and realize that you can make very good money in a market like today because people are desperate for the solution, and you've got the answer.
Well, Eddie, it's like putting two and two together. It's not rocket scientist stuff. I mean, everyone knows what's happening in the economy, and they listen to the news and read the paper. I'm quite sure that they know that the mortgage now is tight. Mortgage money is tight. They're not giving out money like they used to, and the qualifications are a lot stiffer than what they used to, and property is not selling like they used to. So your cash flow system seems to be very timely. So I really advise people to take a look at it. I wanted to go back to your classes. What are some of the highlights?
Well, first of all, we're going to show people, we're going to break down these elements and talk about these 6 characteristics and give you specific examples of different people of different credit ranges and what's saleable and what's not saleable in that area. We're going to talk about the variety of property types that people would seller finance and how that could influence the market. Mm-hmm. We're going to talk about different down payment requirements. So we're going to break all that open and really talk about that. Mm. And then here's a really important thing. We're going to talk about how you can get paid and specifically how much you could get paid.
Well, that is most important.
Yeah, I mean, and so we're gonna show you different ways that you can make money doing it. Not just one way of doing it, but multiple ways to make money. And we're going to be very specific with you and showing you these are typically, the profits. This is the amount of money that is typically earned within our industry. And so then people start realizing, wow, I could start out and do a business with not funding any of the business with my own money, but using, as I said, other people's money to fund your business. And then you're going to be able to go out and show people solutions that they're desperate for the answer. And we're going to show you specifically these opportunities, and not just opportunities that would have been yesterday, but this training is very, very, very tailored to today's market and today's economy.
Well, Eddie, thank you so much for being on the show.
Thank you very much. I enjoyed it so much.
You've been listening to Real Estate Today with Yvonne Candy. Don't forget to visit us on Facebook, Twitter, Instagram, and all other social media.